All righty. Let's try that again. You guys should be able to hear me. If you can hear me, type something in so I know I'm not just talking to myself. And we'll get started here right away. All righty, I think we're good. Let's hear. Yep. All right, perfect. All right, well, good morning. Welcome to the trade findings and adjustments for Thursday, the 17th of 2020. I need to get this typed in correctly. Today, I want to go over protection, why it's important, and just how much money you can make protecting your stocks or protecting your portfolio to the downside. Again, I kind of hit it in yesterday's or the other day's market commentary on how, plain and simple, everyone thinks about how much money they're going to make. That's always what I hear right out of the gate. Oh, on this trade, I'm going to make this. On this trade, I'm going to make that. I've never seen a successful person ever. Let me take that back. I've never seen a successful investor that have focused on how much money they're going to make versus protecting themselves to the downside. And that is the difference, I think, between, how would I say it, everyday people and people that want to truly be successful in their trading. It always comes down to being able to protect to the downside. And that's where I'm going to spend my focus today, because I feel not enough people understand or do that. So if I was going to look at the market today, what could you tell me about today's market? There are a couple things you should be able to say. Volatile. That's a good one, Dave. Volatile. Whipsawed. That's another interesting one, Amy. If I can put mine in, uncertain of the direction, and I'm going to put a historical direction, uncertain of the historical direction that the market typically moves this time of year, right? Typically, this is a down year, a down time in the market. Typically, we're going to see, you're going to see in some way, shape, or form, come on, there we go. You're going to see in some way, shape, or form downward movement, right? Someone asked us the other day, well, you're protecting, and you're protecting in a bullish market. And with all due respect, as we took a look the other day, I don't see a bullish market on the SPY. If anything, it might be moving sideways. But I would not call that a bullish moving S&P, especially looking at September. Obviously, you can say, hey, Kevin, from July through August, it was bullish, and you are exactly right. But it is not, it's not bullish. You can't have those big red bars and be testing the 50-day and expect or call your market bullish. It's just not there. For that reason, let me take a peek at some of our Apple trades today. In fact, I'm going to pull up this one in conjunction with this one. So we've got a bunch in here. Let's see what I can pull up, and let's work through some numbers today to get a better understanding of where and why we do some of what we do. I definitely want those. I'm going to take this. And let's insert it so we can work through some of these numbers right now. Oh, look at those lovely, good-looking pictures. I've got my wife calling, and I'm going to ignore that one. She should have answered when I called, right? Of course, she's probably out picking up a girl from gymnastics. Super busy mom. All right, let's take a quick peek at a little bit of what we have here. We had Apple that ran through a split. And that split price was what? Does anyone remember what was that split price? $4-to-1 split. Anyone remember where that split price was at? All right, well, I don't see it. There we go. Roughly $125. I'll agree with that. I don't remember exactly where it is either, but Mary, let's stick with $125. So what is the first thing you've noticed if you're going to look at an October monthly, 127, and the rest of the shares are 123.75? What do you notice about your protection? I'm looking for a specific comment here, but what do you notice about your protection? Take a look at it. You got 127.50 puts, right? And you have 123.75. If I was just to add those two together, you're going to come up with something around 151.25, right? You divide those by 2, and it actually would be 251, excuse me. Well, actually, let's just do it on a calculator so that way I don't make a mistake. Let's do 127.50 plus 123.75 equals, yeah, equals 251.25. They're 2 put contracts. So if we divide that by 2, average protection is equal to 125, 62.50. So first thing you should have noticed is we've done the best we could to protect at the split price. Well, Kevin, why do you care about protecting at the split price? Because normally you get a 10 to a 12.5. Today we're right at 110.16. You get a 10 to a 12.5% pullback when a company goes through a split. 10% of their shares are selling off because people are cashing in their extra shares. They're playing with the house's money. There's all kinds of weird things that are said and done there, which is right about where we're at right now. Well, Kevin, why did you do it 2 different ways? Well, I did it 2 different ways with 127 and 123 because it first ran up to almost 130. And so I thought, you know what? Watch Apple not follow the historical, the probabilities. Watch Apple be an outlier and keep going higher. Thank goodness we did not do that. Thank goodness we said, you know what? We need to protect. We need to protect and we need to be smart, and we added on these puts. Now what's missing here is on also half of these shares, trading last 3 days. Let me see if I can find it here. Let me see if I can find it. I'm looking for my Apple trades. Why do I not see it? Why do I not see it? I should see it. Under Armour. We had some calls in here. There they are. We had some short calls that we took $6 of credit on. That it looks like we took off at around 68 cents. I can't find those right now. But we also had some calls in here to offset. So where I was going to go at is our average price is at 125, but because we only protected half up high and we let another half go, we had these half protected with $6 short calls as well. $6.20 that we took off for 63 cents. What kind of protection are we receiving? Well, what we paid $9.25 for is now worth $18.47. So we have, well, we've got $9.22 of profit there. What we paid $9.36 for here, we have $15.20. So we've got about another $6 of profit, and we've already booked $5.43 of profit on short calls. So as you're adding all this together, you've got $9 with $5 with $6. I mean, plain and simple, we're making up roughly about $10 of the downward movement. So the key is today or tomorrow, now that we have Apple at roughly the 50-day simple moving average, and you have it at that $110 price, we're looking at seeing if Apple holds that 110. If it holds that 110, we're going to start taking some profits on those puts, and obviously do the best we can to move it into new shares. At $10, you're at like 9% of the cost basis of the stock, a profit. So short answer is we might have to add a couple dollars, but we should be able to pick up almost 10% more shares of stock on Apple. It's what we do. Kevin, how did you know? I get that question all the time. Kevin, how did you know? And the short answer is we didn't know. Probabilities tell you, hey, Apple is much like every other stock, and when it goes through a split price, it'll most likely decrease between 10 to 12%. If it was at 125 split times 0.0875, it should fall down to $109.37. Where it last traded, $109.70. The per penny is $109.37.5. Look how Apple typically is falling down that 12.5% to the upside. It's where we would have expected it to go. It's mathematical. It's simple. It's playing probabilities. Even though right here, for 2 days, it looked like it was not going to follow the probabilities, we still started to protect. We still started to put some out of the money on. We still were using past history to help us make our decisions. I absolutely laugh at these people that are like, oh, I made a mistake, but I learned from it. Bullshit. Everyone says that, and that's not true. They make a mistake, they say they're going to learn from it, and they don't do it. Well, Kevin, it's bearish. Why would you take off or look to take off tomorrow some long put protection? We have a support level at the 50-day. We are coming to oversold on a Williams percent R, which is a medium stochastics. It just says that plain and simple, big money is probably looking to purchase in at this price. Again, that's another probability. And plain and simple, it's fallen to those historical levels that you would expect. Could we wait till we got crossovers? We could. Sometimes you should. And we might. But I wouldn't wait today. I wouldn't wait tomorrow, actually, is when we'll make our decision. I would do everything we can to just follow those probabilities and look to add those shares. but we're doing it because we have technical indicators that tell us we should have a bounce. We don't just do it because, oh, we've got 10%, we can pick up more shares. If it closes below the 50-day today, we're probably looking at testing the 200-day. And if we don't have a strong up day tomorrow, we're going to keep our protection on because we're looking at how far it can fall to the downside. That is why we do what we do. We're going to have a reason. You don't just take it off because, hey, I can pick up 10% more shares of stock. Hey, it's profitable. I don't care if a long put is profitable. My long puts, for all intents and purposes, my long puts, as I'm looking at things here, my long puts, my protective puts are protecting $1.6 million, are protecting $1.66 million. We've got one that's here at a 130. We have an outlier, so someone that needed Apple put back into their account. $65,000. And yes, I could probably pick up 200 more shares. But these 130 puts are protecting 130 times 600 are protecting $78,000 of value. Yes, I like a market value of 12 grand. Yes, I like a profit of $11.27. $11.27 times 600. Yes, I like a profit of $6,762. I love a profit, but I don't love $6,762 more than I love the $78,000 of stock ownership that it is protecting. That is the key to what we're doing. You've got to pay attention to where that protective put's protecting. As we are looking at a trade today, we actually were going to bring up Under Armour, and we might make the suggestion that you can add Under Armour today, or you can take, where is Under Armour? Or you can take that protection off. Not protection, I'm sure. The leap long calls off. Where is Under Armour? I knew I put them on for some people. Under Armour. We did trades here recently for Under Armour. So let me see if I can find that trade. Let me go back here, 30 days. Let's do a filter. Let's find Under Armour. Boy, my internet is slow. God, it looks like it was about 5 weeks ago, actually. Where is Under Armour at? For crying out loud. Well, for the life of me, I can't find Under Armour. We had a leap long call put on for 67 cents. And I can't find that leap long call anywhere. Huh. It was a 67 cent leap 2250 long call that right now those are worth 93 cents. So the suggestion was, or what we're going to talk about, if you had put on those calls, I have some on before that I've dollar cost averaged, but if you had put on the Under Armour leap long calls, now is the time to get out of them. Under Armour technically is up to some high side. So here they are, they're the January 22. They're worth 94.5 cents. We suggested them 2 or 3 weeks ago for 67 cents. If you took 67 and you did the 94.5, 27.5 cents divided by 67 cents, it's a 41% return. So if you put those leaps on, probably time to get out of them. Also, if you're going to look a little longer term, it might be time to start to position yourself to, plain simple, get into some Under Armour. The price to get in is going to be at $11.50. That's where you should be looking for Under Armour. Pretty neat. We have a ton of shares, only like 48,000 shares in the No Parker here. Interesting to see where Under Armour might head to. It's one of those retails that has not moved like a Lululemon or a Nike. Big opportunity there, an opportunity to really cash in some good money. So, plain and simple, look at what protective puts are protecting. Exit the January 22, 2250 leap long calls for a limit debit order of 94 cents. Which should have a cost basis around 67 cents. And you could add Under Armour shares with a $12 November long put or a new trade. And all you're doing is you're playing the Christmas season that Under Armour typically does pretty well. Any questions? Any questions that you guys have that I can answer for you. Amy, appreciate your conversation. Ida, thank you for making sure I was being heard. I hope this helps you to help better understand protective puts. Kind of a short group here, only 13 of us, but I hope this helps you understand short puts. What am I talking about? Long puts are protective puts. I'm a little tired, just got back from a pretty good trip, so I'm here to stay home for at least 4 weeks. And then I run out to St. George and Mesquite, Nevada, St. George, Utah, Mesquite, Nevada. And I've got some amateur golf tournaments I like to play in. That'll be my next run out of here towards the end of October. Are you still betting on a Christmas rally? So we always seem to have one. So Ida, great question. Yes, I'm still betting on a Christmas rally. With that said, it's too early to make a call. We probably need to see if Trump wins the election. So in all honesty, I like the Christmas rally idea. We always have one, as it might be really short, 3 or 4 days, but I would expect that I wouldn't be betting on my Christmas rally until we see if who wins our election. So it's almost like that's a little too soon for me to comment on it. But yes, we are going to have a Christmas rally. It might only be for a day or two. It could be since the election all the way through December. We're just going to find out when we see who wins the election. So great question. But yes, I would still bet or expect a Christmas rally. Any other questions? If not, guys, always fun to spend time with you. I'm back home. I've been out and about for the last 2 weeks. Good to be back home. Good to see family again. Nice to see they haven't all run away on me. And it'll be exciting to get back to all the fun things I end up doing at home, like moving cows, something we're doing today. All right, guys, tried to stall there. Saw no more questions coming in. Have a great day. I've got to run off to the state today, and I've got to move some cows, and all that's got to happen after our market closes. So if I'm going to add more protection, I'm in front of a computer to do so. Take care. We'll see you next Monday. Have a good day and enjoy your weekend. Bye-bye.